Hey guys, welcome back to the channel. It's me, Adam. You're watching Unlimited Options Investing. Let's get right into it. Alphabet reports weak earnings and revenue on big YouTube miss. Alphabet missed on top and bottom lines for the first quarter. YouTube showed particularly weak results. Other bets, which include self-driving car unit Waymo, nearly doubled its revenue compared to the year prior. Earnings per share coming in at $24.62 per share versus the expected $25.91. So you have a miss on the bottom line, and revenue coming in at $68.01 billion versus the expected $68.11 billion. So slightly missing on revenue. YouTube advertising revenue $6.87 billion versus the expected $7.51 billion. So a pretty big miss when it comes to that. And really every YouTuber is feeling that. Less people are inside. Less people have to wear masks. They can go out, take a flight. They can do things with their lives now, whereas they couldn't have done that a year ago or even 2 years ago. But it definitely hurts top and bottom lines. Google Cloud revenue coming in at $5.82 billion versus the expected $5.76 billion. So beating on that. And we can see the stock reacting the next day, down almost 4%, gapping down, opening up around 2,289, going up as high as 2,344, and now at 2,277. Holding a market cap of $1.5 trillion, pretty much near its 52-week low of 2,193 from a year ago, and well off its all-time high of 3,030. Google's revenue came in at $68.01 billion, growth of 23% from the same period last year, which is very good. From the same period last year, that's a slowdown though from 34% growth in the first quarter of 2021, when again the economy was reopening from the pandemic. The company reported $54.66 billion in advertising revenue for the quarter, up from $44.68 billion from the year prior. YouTube ad revenue for the quarter fell short of analyst expectations. The video site was a particular beneficiary of the pandemic when users were primarily at home again, on their devices. This miss also comes with TikTok capturing a growing share of the social media video market, and TikTok is eating everyone's lunch now, whether it's Google's, Facebook, Meta platforms, even Snapchat. CFO Ruth Porat said on the analyst call that YouTube experienced modest growth, mostly in direct response ads. The deceleration primarily reflects tough comparisons to a strong first quarter of 2021. CEO Sundar Pichai said on the call that YouTube's TikTok competitor called Shorts now has 30 billion daily views, which is double the amount of views the prior quarter and 4 times as many as the year before. And I've even felt that myself. YouTube really pushes out Shorts. Google's cloud business was a standout in the quarter, growing 44% and beating estimates as more enterprises shift their workloads away from their own data centers. However, the cloud division is still losing money, reporting an operating loss of $931 million compared to the $974 million a year earlier. During the quarter, Google halted much of its Russian operations due to the invasion of Ukraine. Revenue growth in the European region, which also includes the Middle East and Africa, slowed to 19% in the first quarter from 33% a year earlier. Alphabet's other bets, which include its life sciences companies and self-driving car unit Waymo, nearly doubled revenue from the year prior to $440 million from $198 million. The unit's loss slightly increased to $1.15 billion. Traffic acquisition costs, the metric used to show how much the company pays other websites to acquire traffic, came in higher than Wall Street expected at $11.99 billion. Google's other revenue segment, which includes hardware, Play Store, and non-advertising YouTube revenue, notched $6.81 billion, slightly higher than the prior year. Alphabet stock is down 18% for the year as of Tuesday's close, and yes, it is. We look year to date on that. We are down 21.53% year to date. And on the candlesticks, we had a solid support at 2,500. We hit it earlier this year in March, February, and in January, and then we broke right through it just a couple of days ago. So Google's getting punished. Their earnings weren't actually that bad. In fact, they were actually pretty good, but again, because they weren't perfect or they weren't really, really good, the stock is getting punished. If we zoom out and take a look at the weekly, we're below the 50 EMA. In recent history, whenever we're below the 50 EMA, it's turned out to be a strong buying opportunity. At least for the long term. For the short term, again, until we create a base, we're just going to have to see. So who knows where the bottom is going to be. It looks ugly for the time being, but eventually this baby will turn around, it will rebound and make new all-time highs. At what point? Anybody's guess. Otherwise, that's the end of my video. Thank you very much for watching. As always, let me know in the comments below, what do you think of Google stock? Are you a buyer at these levels? If not, at what price would you buy Google? Let me know in the comments below. As always, hit that subscribe button, that like button, and check out my description for my Twitter, my TikTok, and links to my Instagram. I'll see you guys in the next video.